Vincenzo's Gold Crypto Investing. And you can see we're going to start off here with the old chart or the graph. And we went over this 2 months ago about what the monthly home supply number would look like. And I'm going to update this on a members only video here soon. Put out a little bit to the general public to get you an idea. But this is on my members only content. You can see what we're looking at. Anytime the home supply is high in the numbers, 7, 8, 9, 10, 11, 12, recession. The light gray in the back that's going horizontal up and down, those are recessions, right? Then we look at the monthly supply of U.S. homes in a tighter formation. We can see where we're at the record low in October of 2020, and now we're about 7 or 8 right now, right? Then you can see the medium home sale price. We noted with the big arrow, the price starting to level off up there, right? Then a little bit tighter, you can see it leveling off, and you can see we had a brief recession. Now I believe we're already in a recession. We had one quarter print negative, and I believe quarter 2 this year is going to be negative, and that's an official recession. But I believe we're going into an inflationary depression, which is even worse. The worst case scenario, right? You can see the U.S. dollar to euro. The U.S. dollar has actually been rising quite nicely. You can see back then the cost of goods, the charts we were looking at, right? But then if we go into the new stuff that we were looking at, we were talking about in that video minor capitulation, right? And that's getting closer, right? But if we look at the new stuff, June 15th, an aggressive Fed has global ramifications. Here are 3 ways the world could be hit, right? I think the Fed's only going to do a 50 basis point rate hike today. I don't think they're doing a 75, right? I just don't see it happening. Could it happen? Yes. I just don't see it. The Fed's pretty open about what they're going to do, and they said they're doing a 50 basis point. Saying it's all they're going to do, but you can see in this global markets take a hammering to start the week, and cryptos, as the Federal Reserve will hike interest rates more aggressively than planned. Right, that's what people think. May's U.S. Consumer Price Index came in at 8.6 year over year, the highest since 1981, and prompted the market to price in a 75 basis point rate hike. That's why everything dumped so much, because they're pricing in an extra 25 basis points, which in the grand scheme of things doesn't do anything to stop inflation, but it makes the markets nervous, right? So you can see they're forecasting markets broadly expect between 9 and 10 rate hikes from now to early 2023 with at least 50 basis point increments, which that's not enough to do anything really substantially. And you can see markets broadly expected, markets broadly expected between 9 and 10 rate hikes from now to early 2023. A more aggressive Fed is likely to have ripple effects throughout the global economy and such. Friday's inflationary print triggered a multi-day sell-off, right? Global recession. I think it's a global inflationary depression, right? Not a recession. A recession would be much better than what I think is actually happening with an inflationary depression. And you get depressed growth and inflationary consumer prices. Markets broadly expect blah, blah, blah. A more aggressive Fed is likely to ripple. Friday's U.S. inflation had an impact on global markets, right? Admittedly, slowing just enough to cool inflation but not cause a recession is an extremely delicate balancing act, given the monetary policy is a blunt instrument, not a surgical tool. So, of course, recession risk have increased within last week. CPI print and consumer inflation expectations reading. It's something that they can't do. It's not something that, they're right, it's a blunt instrument, because as soon as they do this, you go into a recession, right? And then in this case, you're going to go into a depression, right? And I think they're going to have to reverse course in a couple of months, and they're going to have to start easing in QE infinity, QE 6, I believe they would be at. But you can see the cryptos were slightly up this morning off their lows. Gold and silver are rebounding nicely from yesterday's dump, still holding up much better than the rest of the financials, right? Gold and silver bullion, which I believe that's great buying opportunities right now. And you guys like to stack Satoshis, you should be starting to stack grams of gold, right, and mining stocks, because I think they're going to do quite well. And you can see the stock market has actually pumped up a little bit this morning, right? And then if we get into the charts, you can see what's going on. The dollar has eased a little bit from its high yesterday. It's consolidating now. If this breaks up in a ferocious fashion, you're going to see everything tank today. But right now, it's just kind of stable. And you can see gold and silver are just kind of hanging out, not doing too bad today. A slight retracement from the down day yesterday. If we look at the stock market's gotten off to a hot start today, right, based on being the big sell-off. And if the Fed talks this afternoon, when they do talk, not if, but when they talk. And if they say they're only doing a 50 basis point rate hike this month, you're going to see the market, the overall markets pump, right? But if we go into the more important things, the crypto, you can see we bounced off that bottom support at 20,201 that we were talking about yesterday. So watch out from the 21,100 to the on that green ring right there down to that red horizontal line that you could get a bounce today after you're hitting a major underneath target, right? On a big flush, you could see a bounce. And if you bounce, what I would look for is your first initial, you can see as we keep expanding this local volume indicator, right? Your first area to try to break over, if you look at the volume indicator, is right there. And that brings you at about 23,600-ish at the top end. And then your first major resistance zone is at 22,000. But if you can break this brief trading that you've had here, you got free range to run all the way back up to the bottom part of this white support zone at 28,186. And that's what I'm going to be watching to see if you can't break up and do that, because if you break this key level at 20,200, you don't have any real support until we hit this technical target that I've laid out here for months and almost over a year now, right? This target's been on this map for over a year. It's just been down here. So unless I scroll the chart way down, nobody's seen it. But your next area of major support is this green ring in the top part of this white support zone, which is another major long-term history of Bitcoin volume traded area, which is actually the orange support zone or the last line of defense to the shithouse, right? But it's a major volume indicator area, so I have it in white so I know what I'm looking at. So that's what I'm watching out for in Bitcoin and simple technical analysis. If you can hold this lower level right here, you can continue to bounce up and run up into some of this upper resistance. We're in the daily time frame. But if you can't hold this area, you're flushing, and you're flushing fast all the way down to that $13,000 target, right? So we're going to watch out for this to see if you can't hold this level. And right now you're trying to hold it. You tried to hold this green ring, got rejected, and now you're trying to hold this red horizontal line. And that's what we're going to watch out today if you can't get a nice pump up into these regions, right? Try to get up into these moving averages up there after being extremely big sell-off yesterday and a little relief rally. But a lot of it's been timid because you got a lot of exchanges not letting you withdraw your money. So if major exchanges are not letting you withdraw your money and essentially holding you hostage to see if they go bankrupt or not, because if they go bankrupt, you're an unsecured creditor. When you put your money on these exchanges like Celsius or Binance or Bitfinex or any of these other ones, and you're staking your coins for interest, you're essentially an unsecured creditor. And if they go bankrupt, the secured creditors get paid and you lose it all, right? And that's what they're trying to prevent, a total liquidation of Celsius. So they're not letting people withdraw their Bitcoins, because if everyone did a massive Bitcoin run, a la bank run, Celsius would have went under on Sunday night, Monday, and they would have had to file bankruptcy, and everybody, their whole, it would have been gone, right? They would have went under. It would have been the first major exchange to go under. So that's what we're watching out for there. And you need to be worried about what they're doing and not letting you get your money off these exchanges. And if you're staking coins, this should be a big wake-up call that staking coins is not the way to go, because if the exchanges go under, because Celsius at a time was offering almost 20% interest. How are they paying 20% interest? They're obviously doing some shady stuff. And then when the market tanked, they were getting exposed, and they were in panic mode and free-for-all. And if anybody's able to get their money when they go back online, which nobody knows when that's going to be, you get your money off that exchange, and you never make that mistake again by staking coins for outrageous interest. That is a bigger Ponzi scheme than the Bernie Madoff thing, right? And they're being shown to be that, and multiple other exchanges are having the same problem. Ethereum's hit this major underneath green ring, and we've had major underneath targets since Ethereum was way up there. And the reason we knew that is our volume indicator, right, for the history of this coin. As soon as you broke these key levels of volume up here, really your buys were up here, but as soon as you broke these areas and got into these sellers, there's nothing there. And now once you break this 1600, you can see you flushed all the way down here to almost where the next buyers or some volume should be, which there's briefly been in here on that green ring. But if you break this green ring eventually, you got no other volume until you get all the way down to $460, and then you're in catastrophic flush land. As old Vincenzo told you, we were forming a double top and then a head and shoulders topping reversal pattern, and you got this left shoulder, a head, or right shoulder, and a targeted move gets you all the way down here to the mean of the volume, which is down there at $124, and I absolutely think that's going to eventually be hit, and you can see we've had a big flush, and if you get some kind of a bounce off these levels right now, right, you can see this would be your rejection zone. If you get a bounce because you're trying to hold this green ring, you could bounce up like this, and then you come back into where a bunch of people are trapped, and they get eager and they sell off, and then you could even trade within this consolidation for a little while. But if you came up, you would likely get rejected up there, and then on the next touch, you would fail and come back down to the next underneath support, as I'm extremely bearish, but I could see a way where things could locally pump in this local time frame, right? So we're going to watch out for that in Ethereum. Cardano has a nice pump overnight. If we go to the hour time frame, you can see we got supported off this local area right there. But if we go out into the 4 hourly, you can see we're getting supported again once, twice, 3 times, and you could pump back up into here. And if you get rejected again by the 200-day, the next time you're not going to hold this, and you're going to flush all the way down here. So this could be a nice short position. If you come up into here, you short it and ride it down to the next underneath support. And then XRP, as we do a kind of a roundabout, we've actually come down pretty far, and we're at the top part of the top part of the shithouse, right? Which is incredible, because I've been calling for this for quite some time. But we're trying to hold the top part of the shithouse, and I could see how you could bounce up and come back up into this area, and then on anything extreme with XRP, because I am not very high in this coin long term, but I know a lot of you are, so I'm going to give you great hodling positions. And if you're looking to long-term hodl this on a phenomenal hodling, if you believe in this coin, here's your levels. You come down into this 10 cents, you can start hodling again. Then if you break down and come down to 5 cents, you can hodl 3 cents. I wouldn't be buying any major positions to hodl till you get to the bottom part of this shithouse, or that's actually the last line of defense. This should actually be an orange. It's not the shithouse. It should be an orange. So we're going to trade at the orange right there. But I wouldn't be doing any big plays on hodling until you get down to 10 cents, and then your next level would be 8 cents, 5 cents, right? And then bankruptcy if it actually went there. But I wouldn't be making any big plays in long-term hodling until we come down another, from current price, until we come down another 65, 70%. That's just my personal beliefs in the market. Take that for what it's worth. But remember, this guy that's telling you this told you back here in this 13-month symmetrical triangle that we had a 20-cent underneath target when the price, where I have circled in yellow, we're constantly getting rejected by these rings. This should be orange rings that I used to have up here, but I changed them to blue, right? And I told you we were going to get rejected during the Michigan football season, took a lot of flack, but now you fast forward into the future, or the current time frame today, and my prediction has been spot on. Like, subscribe, and share. Share us far and wide across social media, across YouTube, and wherever else you guys are on in your media platforms. We need more subscribers. We need to educate more people on the financials, this inflationary depression, and where the state of the market is and where it's going. Peace and love. Peace and love.